Bitcoin gets rejected at 68K, and with a bearish weekly candle close possibly happening today, is more downside coming? Let's find out. Welcome back to FlexCandle, where we read the candles and flex the moves. Right now it's about 2:50 p.m. Eastern time, and the price of Bitcoin is currently at 67,467. And before we do the top-down analysis, I want to go over this winning trade I gave you guys on Friday on the 15-minute chart. I gave you guys a falling wedge flag here with the measured move taking us to about 68,615. Not only did we hit that, but we went up as high as 68,698. So congratulations on whoever took that trade. This is a big win for the FlexCandle community. Now we head over to the weekly chart. This candle closes in about 4 hours, and right now we're getting a red candle that's pretty much below last week's candle here. We're still above the 200 moving average at 58,369, but unless we could start making our way towards this 100 moving average, which is at 87,412, I see us going more sideways, possibly for a couple more weeks. We are far away from the 21 moving average at 92,857, so I could see us continuing to come down on the 21 moving average, and once we catch up to price range, we're probably going to roll over. You guys know that I have this weekly chart in a head and shoulder pattern with the measure move taking us to about 29,745. We did make it all the way down to about 59K, so we got halfway there. So let's see what ends up happening. I'm also seeing us possibly making a bear flag here, and this could take us down to about 43K. Now if we head over to the 3-day chart, we see that this closes in a day and 5 hours. As you can see, we're going sideways. We're still far away from the 21 moving average at around 82K, but look at the stochastics RSI. This looks like it wants to roll over. On the 2-day chart, this is where I have this bear flag that takes us down to about 43K. 21 moving average is currently at 78,335. We're getting closer to price range. Something's telling me that once we come down, touch price range with that 21 moving average, we're probably going to see that bigger move down. Maybe not straight down to 43K, but we're probably going to get below 60K again. You can see the stochastics RSI are about to roll over. You can see the RSI here has been having a lot of resistance. We're getting kind of like a head and shoulder pattern here about to roll over as well. Now on the daily chart, I was talking about this could have been a possible M pattern that didn't play out, but what I'm seeing is that this bear flag here that I created on the 2-day chart could actually be some type of a descending triangle. That's usually when the bottom is flat, but then the top keeps on descending with lower high. So we have a high here, we have a lower high. We got rejected off this 21 moving average. It looks like we're doing a lower high. So if we keep on doing that as we come down, that's very bearish, and we're probably going to roll over. We see that the 21 moving average already did catch up to price range. That's at 69,233. To negate this, we honestly would have to break above the 21 moving average, and I would say above the 50 moving average as well. The stochastics RSI look like they want to maybe roll up, or we're probably just gonna roll over right here. This is already primed to start coming down, in my opinion. We take a look at the 8-hour chart. You can see that the stochastics are on the way down. We're trying to fight to see if we can stay above this 21 moving average. That's at 67,721. We're about $300 away from there right now. The 4-hour chart, I was telling you guys, if we don't hit this inverted head and shoulder pattern by the end of the week, it might be over. Left shoulder, head, right shoulder. This is a complex slanted inverted head and shoulder. I know it's pretty long here, but to be honest, we're still intact here. The stochastics have almost made it all the way down. We're still around the 21 moving average. This candle closes in 5 minutes right now. I would say as long as we don't go below 65, 64K, we could still be intact for this to happen. The measure move to this takes us actually to around 82K. Let's see what ends up happening. If we could get all the way down on the stochastics, reset on the 4-hour, and make our way back up, maybe we have a chance for that move to happen. The 200 moving average is currently at 76,035. We're coiling up here with all the moving averages, so if we could just break above all these moving averages that are coiled up here, we could make our way up to this 200 moving average. Let's see what ends up happening. I'm still going to give this a shot. This is still the pattern that could break us out of here and make us a little bit bullish short term. Now on the 1-hour chart, I'm not liking this right now. One, we could see here that the RSI didn't have strength to come up, and we started rolling over. Number two, we're below the 200 moving average, below the 21 moving average, and I'm also seeing a head and shoulder pattern here. Left shoulder, head, right shoulder, and I would say we're already starting to crack that neckline. So if this continues to go down, the measure move to this could take us down to about 66,390, around there, 66,300. This looks like this might end up playing out, at least short term. This would bring us down to the bottom of the bear flag flag ultimately here that we have drawn on the 2-day chart. Maybe from there we could get a bounce back up to the top of the bear flag, and that could bring us back up even to 70k. So maybe we could come down and then eventually make a pump up. If we take a look at the 15-minute chart, we see that the stochastics are getting toppy. This could be a possible double bottom here. We have some bullish divergence on the RSI, but look, the RSI is about to roll over. We're toppy on the stochastics. That looks like it's going to roll over. If we could get above this 21 moving average at 67,488 and make it up to this 50 moving average at 67,768, we could possibly make it back up maybe to 68k. Honestly, that's not much because we got rejected from there, but it could possibly be the beginning of making a move up. And that doesn't mean that this head and shoulder pattern wouldn't play out, because the 200 moving average is at 68,068. We wouldn't be going above the head of this head and shoulder pattern. So it's possible that we could temporarily get back up to 68k with this double bottom and then roll over and then finish making the measure move of this head and shoulder pattern all the way down to about 66,300. So right now, guys, short term, I'm seeing us being a little bit bearish and possibly coming down. I could see us maybe making our way back up above 70k. That 4-hour inverted head and shoulder is still intact. As long as we don't go below 65k, I think we still have a chance. But honestly, overall, long term, I still see us bearish, and I do see us making a lower move down. All right, guys, so that's the breakdown. If this gave you clarity or a setup to watch, do me a favor, like, drop a comment, subscribe. And if you have a stock or crypto you want me to go over, drop it in the comment section. This is FlexCandle, where we read the candles and flex the moves. Catch you on the next chart.